Okay, folks, we are 27th of February 2023, and inflation is back. So, PCE, the preferred method of monitoring inflation for the FOMC and the Fed, coming in pretty hot on Friday. And of course, then down we go. So, the trade of the day for us here at Duggan Capital was short on the DAX. Bang, down we go. Really nice selling. And really, the bid, while this retracement is to be expected, I don't think these bids are going to survive above like the 15,537s or 15,570s if we get that level of a pullback. Why is that? Well, even on equities, we can look at the same situation on equities here on the S&P. Lovely, just consistent grinding lower all day there, all day on Friday, and so kind of putting in about 1.7. Well, technically, we were down actually 1.69 on
China unveils an overall
session. So really, yeah. Look, why are we down? Well, PC index came in hot. And why do I think that these bids won't be sustained? Well, essentially because the yield on the bonds is now better than what you can get on corporate bonds and what you can get on returns on the index. Okay, so therefore it's going to be super, super difficult for equities to be interesting for portfolio over the short and medium term. When bonds are essentially, you can get just on 5% now from anywhere from a 3-month to a 6-month to a 1-year T-bill, so U.S. Treasury. Of course, that is the risk-free rate essentially. Okay, so why are you going to then go and gamble taking a corporate bond on Square or Amazon or something like that, where you are adopting risk? And actually, the yields on those bonds are actually coming in a little bit lower than the 6-month or the 1-year right now. I mean, even the 10-year bond, the T-note, let's have a little look at the T-note here. Even the 10-year bond is yielding, I think, about 4.7 or 4.86. All right. And so there's a couple of things going to be going on here over the coming weeks. All right. Number one is I think these bonds are going to certainly hold on these lows. And while they do, equities are going to have a very hard time holding a bid and pushing further higher. I think we need to trade lower. And so the yields will, I think, get higher on the 10-year and on the 6-month and on the 2 years. Okay. And that is going to hold equities down. And so there's going to be a lot of put protection bought. So what you're going to then see is bids in the VIX. Okay. Does the VIX need to come down to 19s and 20s and then find buyers to go higher? That will remain to be seen. But, for now, I think it's lower across the board is what we need to be looking at here, guys and girls. Okay. So here's the T-note. Can it go lower? Of course it can. Can we breach 109.20s? I think we can. You're seeing if we switch to we're on weeklies here. I think we go to a monthly bar chart, and you can see that we've downtrending. Obviously, we've had our pullback here, and then rejecting on that 116.8, and I think we can go lower. And so we're really staring down the barrel of 2014 prices on these bonds. Right now, we have been there already. Back in September and November last year. October and November of last year. And so, yeah, I think we can go lower. All right. So that's T-notes. And so, yeah, as we look at equities here, as being a good purchase, look, trend, no trend, I don't think it matters, right? I don't think it matters. I just think generally, I think we're not going to survive here. And I think we need to come down. A lot of the potential for equities to go higher as the rates were coming in was that we had a terminal rate coming in May of about 5%, 4.7 to 5% terminal rate. Now that's getting pushed to June, and the terminal rate is looking like 5.25 to 5.5%. Now I know I'm putting a lot of people to sleep here with all this talk of bonds, but essentially, if that terminal rate is higher, therefore, equities are then now going to compete with bonds for what you want to own in your portfolio. And so this seems far less likely right now on equities than this. Okay. That's essentially as simple as it gets right now. So, 40-46s. We've seen some decent selling come in off of 4th there on Friday. The market went down. And I think we can go lower. So if we put this back on, look, we're going to trade what we see. And at the moment, we're under retracement on Friday's selling. We're back in this range as we thought we would be. Buyers generally coming in from the 39.66 halves. Look, I think we can definitely have like a decent pullback, but then I really want to see what we do around like 40-20s on the SPOs, and in the round, but generally this downtrend and Friday's highs, if we get back there. So, just do be careful out there, but yeah, I like swinging shorts on equities from a little higher, just a little higher here. So, I think maybe 33,070s on the Dow is a bit of a range high that we were looking to trade last week. It didn't really come in as a decent area to short, but of course we did sell straight down through there on Friday and didn't look back. So, 200 SMA also coming into play on the Dow. And then if we bring in the NASDAQ, we breached that 200 EMA. So Ian kind of pointed that one out to me on Friday that, was this a target? Well, yeah, it was. And then some. And so, this is why I don't really trade on the 200 EMA because, totally blown out of the water there on Friday. So we're just testing that now and set to go a little higher again on NASDAQ here. And we could probably just extend this bull flag down here. So we're really stuck in this channel. This does tell me that, we are going to have this channel and then at one point break to the upside, but it's just timing is everything with trading. You could be right on direction, but if you haven't got timing, you are not making the cut, essentially. Oil, what's going on with oil? Too much. Someone should write a book about what the hell's going on with oil at any moment over the last 3 months. But essentially, we are kind of trading side to side within this pennant. So looking for longs as close to 72.49s as possible. Looking for shorts against 81.80s, or and really that's if we're kind of transitioning between the two, it's very hard to kind of have that good direction for a really nice big trade. Of course, you were looking for shorts here on the PVOL this morning. Had to take a stop on that one. Just not working out. So I'm really inclined to leave oil alone for the rest of the session until I see something worth actually, something again worth trading. That could be a pop to 78.35s, 78.71s, close the gap at 78.71s. We'll put that on there. But that would be about it for the shorts. So that's it, really. That's it. And of course, of course, cold snap coming in on the US here over the next 3 weeks. It's on the radars. And nat gas now is bid up, gap up on the open on electronic trade there. You can see the gap here in yellow. So we were just about to close the gap on the downside, but I think I like longs in nat gas, maybe support on 2 spot 435s long, to then get up to at least 2 spot 759s over the course of this week and higher. So let's see this on the dailies. Where is my daily gone on that gas? There it is. Okay, so I think 2 spot 759s on the upside, and ultimately probably a pullback to 3 spot 239s. Maybe a little much to expect this week, but probably a bit too much to expect this week. So just do keep an eye out for buyers on that gas throughout this week. All right, that's it for me for a Monday morning pre-US. Have a good one. Stay safe out there. Cheers.